What's going on, everybody? All is well. Today I'll be going over this video from Yahoo Finance. Uh, they're basically going over, in my opinion, one of the best companies in the stock market. Very boring, very low key, and often overlooked. But this company has been steadily growing throughout the course of the year. I mean, it's currently outperforming the stock market. But let's get into what they have to say about this trash company.
Well, trash has been good for investors this year. The biggest player in the industry has risen 17% year to date. It's trading near a record high. That compares with a less than 3% gain for the S&P 500. We're talking about WM, the company formerly known as Waste Management. We've been focusing on stocks like this that have been overperforming amid a volatile year for our series, The Why Behind the High. And we're joined now by WM CFO, Devina Rankin. Devina, thank you so much for being here.
Happy to be here and happy to be part of this segment in particular.
Yeah, I'm sure, given the performance that you guys have been seeing. For people who aren't that familiar with WM, sort of big picture, tell us what an investor can expect from the company. My sort of impression of your industry generally and you guys specifically is pretty steady business, right? Everybody needs their trash removed, both residential and commercial, and business that probably generates a good amount of cash.
Yeah, that's a great synopsis. What I would say is we're an essential service, and that means that we're resilient. We do well in any economic environment and any political administration. So when people are looking for a safe place, we're often thought of one of those places to park money in uncertain times. What I would say is we go beyond that, though. We're also a growth engine, and that growth comes from strong execution from top line to bottom line in terms of how do we grow our markets organically, how do we grow through price, cost optimization, leveraging technology in order to optimize our cost to serve, and thinking about scaling our business both in our core, but then also in things like healthcare solutions and renewable energy.
I want to show folks a chart of the revenue growth you guys have had over the past decade or so by year, as well as EBITDA growth. And again, it has been that pretty steady growth that we've been talking about. But within that, what would you say, looking forward, are going to be the biggest areas of growth for the company? And you mentioned medical, for example. I know you guys recently completed a big acquisition in that business. Is that where investors can expect that sort of growth to be a little more supercharged?
Yeah, so I think it's important to look at our...
Yeah, Waste Management, or WM. I mean, 10-year growth is just been year over year, just a steady increase in revenue. I mean, this is a beautiful chart. Hold on, I have it pulled up here. Let's go to the 5-year. Oh wait, year to date is up 16%. It's close to this 52-week high. 1 year out, it's up 12%. 5 years out, it's up 129%. And let's go to max. Since its inception, I mean, this is a beautiful chart. Just steadily has been steadily increasing throughout the course of the years. Oh, that's 20. Yeah, that's during the pandemic right here, 2020. Was that what? Was that $100? Yeah, and it just recovered and just been on an upward trend ever since. But yeah, Waste Management is one of the best stocks out there. But Waste Management doing its thing. Now, number 2 is Republic Service. this is another trash company. It's similar to the tech sector. You could say um, Microsoft number one, like Apple number two. You know, 1A, 1B. But yeah, public service up 24% year over year. 1 year out is up 29%. 5 years out is up 5 years out is up 210%. Max is up a hundred. Wait, 1,349%. Dang. You know, there's this thing about companies in the same sector that's number two. Like number one in the sector, they're already up there. They're trying to keep their spot for their first place spot, but number two has a lot more runway to catch up to number one. You know, but yeah, Republic Service is another, I mean, slept on company. I know waste. They're talking about. I know they're talking about waste management, but Republic Service, number two. Both companies, in my opinion, are amazing, but it just looks like Republic Service has a lot more, a little bit more runway. This is also close to its 52-week high. But anyway, let's get back to waste management.
History and put our history into really solid context for purposes of where we go from here. What we have done generally over the last decade is grow EBITDA. Our target had been 5 to 7% annual EBITDA growth over the last 10 years or so, and we've meaningfully outpaced that. Our EBITDA growth in the last 3 years has been 9% on average. And when we think about what lies ahead, it really is a supercharging, and that supercharging comes from that core solid waste growth that we've, had a consistent track record of being able to generate, and then the strong integration of the healthcare solutions business, the Stericycle acquisition that we completed in November of 2024. That integration's off to a great start, and it's really scaling WM's expertise in materials management to a new segment of the economy. On top of that, we are a sustainability leader. That means that what we do goes beyond picking up your waste from the curb and taking it to a landfill. We're the largest recycler. We're also the largest generator of renewable natural gas from landfills in North America. So those things are creating economic value and environmental utility, which we think will spur incremental growth over the next 10 years.
And it's my understanding, Davina, that you all still have some money set aside for more acquisitions, right? So I'm curious where you see those opportunities and what kind of cadence you would look for in terms of, how you want to add on those other opportunities.
Sure. So one of the great things about this business is that we generate strong and consistent free cash flow. Over the next 3 years, we expect to generate approaching $10 billion of free cash flow. So when you think of that combined with a solid balance sheet, we certainly have room for incremental M&A. We look to the core for M&A opportunities, but as the largest in this space, those opportunities can be limited in some respects, but we will continue to focus on where we can complement our market positions and extend them even further. Beyond that, I think the step that we're taking with the Stericycle acquisition indicates that we're going to look at adjacent growth as well. Where can we take our core competencies and extend them to other parts of the business?
You also mentioned, sort of taking out costs as part of the equation. And one of the ways you guys have done that is automating some of your business, particularly at recycling facilities. Can you tell me what percentage of those facilities have been updated with that, and kind of what the target is there, and how much?
That's crazy. Like every company is going to incorporate AI or artificial intelligence into their business model to make basically the work more efficiently. everybody's going to incorporate it into their business model. I mean, there's companies already started. We seen I saw an article about, I think they opened Amazon opened a AI warehouse. I can't remember what state it was. It was Tennessee or Michigan or some place like that. But yeah, excuse me. All these companies are going to incorporate AI to help increase the profitability and efficiency of their business, one way or the other.
That's going to save the company.
Yeah, so we are investing $1.4 billion over a 5-year period in upgrading and expanding our recycling network. It's been something that we've been working on the last few years, and we'll be substantially complete with that by the end of 2026. At this point, we've invested 85% of that planned capital. But we see things like end producer responsibility as something that may extend that investment portfolio from here. So we're really excited about what we've accomplished. When we've made those investments, what it does is it expands recycling access to more communities. On top of that, it creates more viability, long-term sustainability of recycling as a service because it reduces labor dependency. And those are jobs that are really hard to fill. So we've reduced our labor costs by upwards of 30% at our facilities. And there's more work to do across the network, but we're substantially complete with the investment that we announced a few years ago, and really happy with both the expansion of recycling access and the improvement to recycling profitability that's happened with those investments.
You mentioned labor, and I have to ask about what we have seen unfolding across the country as of late. We've been talking to a lot of economists on the effect that the immigration crackdown is going to have on employment overall. And when I think of less skilled labor, your industry is one of those that I think of. We were just showing video of, the trash truck moving through the neighborhood. Is this something that's affecting your business? How are you guys thinking about it?
What's really important is, first, I want to sing the praises of our drivers and our technicians because, it really is a skill. And so we don't think of our workforce as unskilled at all. They are industrial athletes who make what they do look easy, but it is anything but. And we have drivers who have worked for us for decades, and we appreciate and celebrate everything that they mean to us and to our communities and customers each day. We're happy to say that the immigration policies of this administration have not had an impact on our business.
Yeah, let me just say salute to the people, the drivers of that pick up our trash, each and every week. Cause that's one job, like, I ain't gonna lie, I wouldn't do it. I was like, waste management, truck driver, nah, I'm good. But yeah, salute to all the truck drivers, the trash that pick up everybody's trash, salute to them.
And we don't think that they will. We are a people-first organization focused on investing in our talent and ensuring that our talent feels like they're part of an organization where they want to spend not just years, but decades.
Davina, thanks so much. And by the way, investors, we'll hear more from you guys on June 24th. You got an investor day scheduled, so we'll be tuning in for that as well. Thanks so much.
Thank you.
Yeah, but I like this series from Yahoo Finance. It's pretty cool. But yeah, like I said, Waste Management, one of the best companies in the stock market, hands down. I just looked over their charts, and it's gonna be around for a very long time. And also, number 2, Republic Service. They're also going to be they're also here to stay, and that it's just it's an easily overlooked sector. Obviously we got the big companies in the stock market, like the Microsoft, the Apples, the Metas, the Googles, and stuff like that. Waste management, public service, easily overlooked, but you know those two companies right there. When there's volatility in the market, and the tech sector is the first sector they get hit heavy. Yes, when it's green, the tech sector is going to skyrocket. Tech stocks is gonna run up fast, but when there's volatility, they crash down just as fast. But what's safe and steady and reliable are companies like Waste Management and Republic Service. Easily, two companies are overlooked that's just been doing their thing throughout the course of the years, and they'll continue to improve and scale up going further. But yeah, man, Waste Management and Public Service, two very boring companies. I know this video was talking about waste management, but in my opinion, you can't mention waste management without mentioning Republic Service. 1A, 1B. But like I said, I like this series from Yahoo Finance. It's pretty cool. But anyway, with that being said, thank you guys for watching. Like, comment, subscribe, all that good stuff. And until next time, you guys be safe. All right, peace.